Charles Turk joins me now. He's the manager of the 9 Point Alternative Health Fund. Chuck, welcome back.
Thank you very much. Happy New Year.
Happy New Year to you too. Chuck, I see you're still performing at 23% to the good since inception.
Yeah, that's going to be 3 years in March.
Exactly. Yeah. So you fared a lot better in this most recent downturn than even some of the biggest funds. So explain to us, please, how you've managed to accomplish that.
Thank you. 2019 was not a great year for anybody, and despite the fact that we outperformed, it was a challenging year. We ended the year, our 1 year number is negative 5%, 5.73. When you look at the the marijuana index, it was down like 35-40%.
Yeah.
And so what are we doing? We're being active. I think we avoided some messes before they happened. One of our greatest gains last year was Hexo, because we owned it January to April or May, and then we didn't own it again. We were out of CanTrust in the middle of April and didn't own it again, or 90% of it, sold it down. So we did our work and continue to be very active. And then the non-cannabis portion of the portfolio also helped stabilize the portfolio. The health and wellness, the nutraceuticals, owning companies like Jameson Wellness did very well for us last year.
Interesting. So now for 2020, what's getting you excited?
Well, for 2020, the portfolio is still overweight when we look at cannabis, still overweight U.S. names. We think that the U.S. market is the place to be. Yes, it's a state-by-state process, but when you look at the states that are legalizing, either going from medical to rec or going from no registrations to a medical jurisdiction, there's 19 states that since January 1st have some form of legalization being debated in state houses, including some biggies like New York, New Jersey, Florida has a ballot issue, but these are big states, they're meaningful states, and so when you look at the multi-state operators that have limited licenses in New York, it's a medical state currently, New York could be a huge win. New Jersey could be a huge win. When you take a look at the first few weeks of what happened in Illinois, they're going like gangbusters.
Right. Florida is what, the number 4 state in terms of population?
Second or third.
Oh, is it?
Yeah.
And but the ballot that was expected to sort of catalyze the introduction of recreational rules was not successful, correct?
Yeah, they didn't get the required 700,000 signatures certified. However, there's a public debate going on in the state, and it's going to lead to a vote during the 2020 election, hopefully. That's where it's going. Okay. Regardless, even if nothing happens in Florida, it's still a medical state. The annual sales of cannabis just as a medical state right now are upwards of $700 million. So it's a very important state, whether it turns a rec or not.
Yeah, you bet. Afria raised $100 million, they announced today, without disclosing who the investors were, which is becoming somewhat of a regular feature of the cannabis universe. Why wouldn't they disclose who their investors were?
Sure. I think this is similar to last week's announcement with Curaleaf, where Curaleaf did a more traditional $300 million senior lending package, syndicated. And there were confidentiality agreements signed with the syndicate of lenders. They didn't want their names to be disclosed. I think that what's going on is these names are fairly well-known names. They don't want their public reputations maybe to be sullied, although they see a great investment opportunity. And so until U.S. regulations are clearer with respect to the SAFE Act and getting FDIC access to the cannabis companies, that I think you're going to continue to see the lenders wanting to kind of stay in the background, just not wanting to rub the noses of the regulators too strongly.
Sure. Okay. What about Canopy? We saw another executive join the company from Constellation. And
Constellation North.
Are they going to change the name? Yeah, the Constellation Cannabis Company.
Yeah, I think, the changes that are going to go on at Canopy, I think, are varied. I mean, first, you're going to have executive changes, and you're going to see some people come from Constellation. You've also seen that changeover at the board level with Constellation representatives. I think the bigger issue is going to be over the next quarter or two, announcements with respect to either layoffs and or facilities being shut down, sold, because they've got to right-size the business.
Right.
Operationally, there are a few larger Canadian cannabis companies that have to get on a path to profitability. And so...
Sure, Aurora is probably the poster child for overbuild at this point, and their announcements at the tail end of last year, halting development of some of their larger properties is evidence of that. Do you think that there's any chance ever that any of these really largely built guys who have focused on capacity for production are going to have a reason to finish those projects? Or do you think that the market's going to continue to fracture as more new entrants come along, especially ones that are focused on being right-sized, as that term is?
I think what we might be seeing is something similar to what we see in the mining industry every so often. When the mining industry turns over, non-core assets are sold to operators that can make a business out of a single asset. And what you might find is someone with a license may acquire a single facility and become a micro grow or a smaller cultivation, or even get into the extraction side of the business. We have over 250 licenses now in the country, which is way too many, but the federal government, Health Canada, is just issuing. And I think that we as a country, 37 million people, we don't need that many. So there is going to be some right sizing. And already we also saw, unfortunately, in December, a couple of bankruptcies, right? Chapter 11s.
Yeah.
We're going to see that too. There are companies that are burning through cash and have no access to a lending facility, and they don't want to raise equity at these prices. And I think given the tighter capital markets, you're really seeing a bifurcation in the market. There's haves and have-nots. And I think we're going to continue to see that.
Yeah, to what extent is that line drawn by U.S.-Canadian border? I mean, is it a case where it's mostly Canadians that are the have-nots and most of the Americans that are the haves? Especially,
I think you're seeing it on both sides of the border.
Okay.
There's a group of, let's call it the senior multi-state operators. Forgive me if I leave one out, but Cureleaf, GTI, Cresco. Maybe you want to put Harvest in there because they've all been
Harvest, yeah.
Truly, they've been successful at raising senior debt,
right?
Not debt with warrants and options where you might get hedge funds involved, but senior debt. And then there's a second and third tier of U.S. companies. Maybe they're single state operators, maybe they're extractors, maybe they just have brands and can't go it alone but need capital to grow. So I think this is, the next 6 months to a year is going to be interesting on both sides because we've got similar companies that are well capitalized in Canada and the U.S., and then similarly, there are companies without.
Sure. I noticed that despite the fact that Organa Graham has gone down from a top 10 holding, that doesn't mean that you've sold it. That's just a function of the valuation of the company has deteriorated, and so it just goes out of the top 10.
Yeah, it's market price based solely, and we had questions because we speak often on the strength of Organa Graham, its operations, its management. And last week when they came out with their quarter, which was very strong and kind of coming back to what OGI has been known for.
Right.
They were up 45% in one day and then 6 or 7% the next day. No, we're still fully holding our Organa Graham shares, and good to see that it's appreciating, going in the right direction.
Sure, you bet. Okay, so what companies out there do you think are at the greatest risk of existential threat? Without naming names, what type of companies, let's say?
Well,
or name names.
I think that, well, we've mentioned already a couple. I think that
Right.
Aurora has to do some serious cutting. I think that Hexo has some changes that need to be made. These dilutive offerings that Hexo has been doing in the last couple of months are hurting shareholders and hurting the trust that the public markets, I think, have in management there.
Right.
That's a cause for concern. Then you look at other companies,
MedMen.
smaller. Well, in the U.S., yeah, I mean, MedMen is going to have a tough go of it.
Sure.
They spent a lot of money building a brand,
Yeah.
and the brand is great, but then under the surface, operationally, it's got challenges.
It's in trouble.
Yeah.
All right, Charles, we'll leave it there for now. Thanks very much for joining us. We'll have you back soon.
Great, thanks for seeing.
Only one, two, three.